3, 2, 1.
Hello, everybody. Welcome back. This is our week 2 review brought to you by DAS Trader and Nasdaq. This is the #1 best trader spring novice competition. My name is Michael DeGioia. I'm the Director of Educational Services and licensed professional here at DAS Trader. And I'm going to jump right in and jump to the news. We are just starting earnings season once again. And JP Morgan just announced a pretty convoluted report, to say the least. I think that you could probably spend a few long evenings trying to digest what they all the issues and problems, and of course the $500 million write-down or loss from the Russian Federation, and certainly Jamie Dimon's comments that there was going to be volatility. And that was kind of an ominous statement out of JP Morgan. Jamie Dimon is usually the perma bull. And for him to say that there's going to be volatility one way or the other is kind of a break from tradition. So the big question is this setting the trend for this earnings season? And certainly we saw the markets down today, and we will go through that when we get to the market analysis phase. But not really setting a great trend for earnings this season. And we'll see if that trend continues. Next big item in the news is that Elon Musk, who was originally offered a seat on the board at Twitter, has now changed his just about 9% stake in Twitter into an offer of $43 billion to take over the company and then to take the company private. Now, is that because of Elon Musk's SEC issues? What is the reason behind this? Certainly, Elon Musk probably doesn't want to deal with Twitter being a public company, especially if he's going to be defending everybody's privacy rights, as he says he is. Whatever the case is, Elon Musk's tender offer for Twitter, Twitter was down a bit today. And certainly some of the other internet stocks like Snap was also down today. Obviously Snap being a potential, if Elon Musk is acquiring Twitter, then maybe Snap is a target as well. I know that the big item for Elon Musk was one of the Saudi princes was also having issues with Elon's offer. So certainly that is another outstanding issue that needs to be resolved. But all of this making for some volatile markets, and the volatility is expected to continue. And that gets us to our most common topic here on the DAS Trader Newsroom, which we've been calling for a long time and talking about for a long time. The inflation that was transitory but not so transitory. And it doesn't look like it's going away anytime soon, although the mainstream media was, kind of pumping it up, saying the peak is here. None of the data really reflect that the inflation we're seeing is transitory and or going to be going away anytime soon. In fact, all of the data indicates that inflation is likely to increase unless the Federal Reserve continues to raise interest rates quite precipitously. There is nothing, and I wanted to just take a few minutes to explain the CPI, Consumer Price Index. If inflation is increasing consumer prices by, say, 5%, interest rates need to be around 7%. And currently our interest rates remain around zero, or just off zero at 0.025 basis points. And that's pretty much the explanation. In order for inflation to be kept in check, the Federal Reserve Bank needs to keep interest rates ahead of the CPI Consumer Price Index. And the Federal Reserve is really squarely responsible for the inflationary problems. Of course, there's other problems, that have, exacerbated things like the war in Ukraine. But this problem existed long before the war in Ukraine. The Federal Reserve was not raising rates about a year ago, and now the problem has only gotten worse. This last PPI, the Producer Price Index, showed a 40-year new high on inflation. And obviously, if producers are reporting producer price index, right? So producers are the wholesalers. It used to be called the wholesale price index. If their producers are reporting inflation, that takes about 2 to 3 months for it to trickle down into the consumer price index. So if the producer price index, which came out this week, is showing an astronomical 45% increase in fresh fruits and vegetables, which is like unheard of, at least in my lifetime. Unless you're going back to and if you go back in history, maybe in Argentina or someplace like that, or the Weimar Republic, you have, that's Germany pre-World War II, you have inflation like this. But certainly we have not seen inflation, to the likes of this in the producer price index. We had a 22% increase in grain and wheat. So you have really basic foodstuffs and food supplies, increasing at an incredible rate. And that means if you have a restaurant, you have to increase your prices every month. A 1% rate of inflation means that at 30 days, you would need to, raise your, your prices in your restaurant by 1%. I mean, this is really, really very high inflation. It's very difficult for small businesses to adjust to, and even large businesses to adjust to. So they have no other choice but to pass it through to the consumer. And obviously, the consumers are pretty tight at this point after 2 years of pandemic. The stimulus money is gone, and people are spending on their credit cards. And you can see this in consumer debt spending has increased precipitously. So my analysis is that the prices are going to increase further, and we need to decide, obviously everybody on an individual basis needs to decide how to deal with it. As traders and investors, we have to look in the sectors that are most likely to benefit, so that we can outpace the increase in inflation and make money with our money. Otherwise, the old Tina, there is no other alternative, or you can call it NOLA, no other logical alternative, whichever way you want to call it. Your money cannot be sitting fallow. It needs to be making money at a rate that's faster than the rate of inflation. And this is really the key goal in the current market. And with all the volatility, there's a lot of places to put your money, and potentially that you can take advantage of that with trading. And let's take a look at some of the places that our traders in our trading competition have put their simulated money for the week of April 11th to April 14th. We are doing today's show because tomorrow the markets are closed, thanks to the Good Friday holiday. So please note, markets closed tomorrow, 4:15, in observance of Good Friday. There will be no trading. And let's go right to the ranking. We have a new winner in the lead of the competition. So our new winner is Best 1003, who had a daily gain of $717 and about $5,000 up in the competition. And we also have a new second place. We have Best 0996, who had a $3,800 gain and still up, just about 3,600 in the competition. And we have our number 3 or third place competitor, Best 1000, with a $928 gain for today and a 3,300 overall. Now, what's really interesting is that this time all of our top 10 traders are currently profitable and green. We don't have any negative traders in the top 10, which is great. That means that most of the people are just being profitable. And I always say this: if you're consistently profitable and you stay green in the competition, you have a good chance of being in the top 10. That is certainly the case this time. And I wish everybody nothing but the most consistent trading results going forward in the competition for the next 2 weeks. All right, so let's jump into the top stocks and the most actively traded stocks for the competition. And that is LEXX, RAD, which is Rite Aid, VERU, Veru, and CRTX, and SOFI. So let's go. We're going to take a look at them on their charts as well once we go to the market analysis section. And certainly, you can see that Lex, it's a low pricer. I mean, this seems to be the pattern in all of our trading competitions. You have the popper, the one-day popper and dropper, and then you have the old standby. And as I go down the list, I can see American Airlines, an old standby. I see Delta Airlines, another standby. Ford, a very often standby. Don't see our most freak over there. You got Twitter, which we talked about in the news today with Elon Musk news. I don't see the AMD and the AMC, the standard old standbys, but we certainly have a lot of the common pop-ins, which is American Airlines, Delta Airlines. Now, again, they're coming close to their earnings date, so we're going to start seeing a lot more earnings names in the competition as things go on. So we'll just keep our eyes open for that. So just to remind everybody, review your strategy. You know, what has made you successful so far? If you've already had 2 weeks of the competition and you're in the top 10, I would pretty much continue to do what you're doing. Maybe try to eliminate and find some of the mistakes that you've made and get rid of those mistakes so that you're more consistent in the next 2 weeks. Focus on what you've learned during the competition and try to review your trades, what you did right, what you did wrong, what you can do better. I do this myself in trading. I had a couple of positions open today, and I realized that I closed them too soon, and certainly it would have made a significant difference in my results had I just waited till the end of the day, and it wouldn't have cost me anything. The risk was already taken, so I could have run my trades better had I just waited till the end of the day. And that's something that you have to always do. You got to look at the risk reward analysis of changing your strategy, leaving your trades open versus taking your profit. Have you hit your goals, and what can you do to make your trading better? And that's going to take you to the end of the competition. It might put you in the winner's circle. All right. So the spring competition runs until April 29th. You can check it out check out all the information and the results and all the real-time tracking of our competitors at onebesttrader.com. And you can check us out on social media at #1besttrader. You can look at us on Twitter, Facebook, and Instagram. And now is time for our market analysis. I'm going to transfer over to my other screen. I'm going to bring up my Dash Trader here. Okay, and I'm going to bring this open a little bit. I may have to. Well, first I'm going to do the market analysis on the general broader markets. So if everybody can see here, you know, we have a 1, 2, 3 down, potentially a 1, 2, 3 down on the markets. We had a very nice green day, but it stayed inside the range of the prior red day. So you have, you know, red day, green day, red day. And, you know, we're probably, you know, we could go either way here, but more than likely, looking at this pattern, right, we're going to be heading back to support. If we break this low here, if we break the market low here, we are heading down to here once again. Now, that doesn't mean that we have to do it straight away. I mean, certainly the market closed inside of this range. We could gap up, go sideways for a little while. There's nothing to say that it has to happen right away. But my guess would be that this is a 1, 2, 3 pattern. And a 1, 2, 3 continuation pattern is that this is 1. Okay. This is 2. And we don't know how far 2 is going to go sideways. But as long as it stays underneath these moving averages, and you can see the little crossover moving average indicated by the red arrow on our Dash Trader software, as long as we stay in this bottom portion of this range, this could be a 1, 2, 3 down. And the 1, 2, 3, if you take this move, and you take the measure of that move and you bring it down, So you see the top of this lines up with this, and then that would be the 3 down. That would bring us to this support level, which would be the 1, 2, 3 down. Okay, and that's on the S&P. Let's take a look at the QQQ. QQQ, is the Nasdaq, and it's worse than the S&P. So the Nasdaq is struggling more so than the S&P. And it has pretty much the same pattern, except it's slightly more bearish. It is further below the moving averages. We have a lot of earnings coming out next week. I mean, really, there could be a lot of volatility. Hopefully, it stays sideways for a little while and holds up fairly well. And then next one I'm going to take a look at is the IWM. IWM tends to be a leading indicator. So the IWM is shaping up to be really, really bearish. This is a tight consolidation. Right? And then, of course, we're staying in the bottom range of that consolidation. Okay? Bottom range of that consolidation. And then that would lead us to a breakdown of right here, right? That would bring us to first level of support. If we do break down below this diagonal support level, then we would take us down to the horizontal support level, which is right down here at this low. Okay, now the next one I'm going to go into is the old man. Okay, the old man is gold, right? So the US dollar has been pretty strong lately, but let's take a look at if gold is going up and the US dollar is going up, that's telling us that there's some, strong expectation that they're going to be raising rates in the near future, and this gold tends to fight inflation. So certainly you can see here the consolidation in gold. We broke out above the moving averages. This is the breakout of the bull pennant that we were talking about, last week. And of course, we're probably going to continue in that direction. SLV. Also moving to the upside, we also know that silver tends to outperform gold in instances of a bull market in metals and the old currencies. It's also why we call gold the old man. It's because it's the old currency prior to 1972 Bretton Woods conference when we went off the gold standard. And then, of course, you have, so that's the silver. And then, of course, we have USL. Well, we could actually look at oil. So here's the oil ETF, this oil ETN rather. You can see it's forming a similar kind of bull pennant formation. So that's why more than likely, whatever help the release of the strategic reserve it's kind of done, as I said last week. And then you could expect a breakout in oil. Oil is the prime commodity. So if oil prices start to break out and go higher, you can expect everything to go higher. And that's why I said inflation is certainly not peaked, at least not looking at the charts. And another one is DBA, which is an ETF that is a food ETF. It is a combination of wheat, grain, corn, all kinds of foodstuffs. And it is it's an ETF that owns the companies that produce these things. And certainly it's already broken out. It is pulling back a little bit, but it is already in breakout territory, almost in all-time breakout territory. I'm going to go back as far as I can go back, and I can't find a time when it's been at this price. And let's do Bitcoin, GBTC. So Bitcoin trades with technology these days. And you can see Bitcoin is hanging out here near the low of a consolidation. Certainly not a good looking chart. And I don't see a lot of prospects there. So Bitcoin not acting as a hedge against inflation. Let's go to AMD, our semiconductor stock. AMD breaking down once again. Real problems on the AMD front. Semiconductor potential supply problems. You name it. China issues. You got all kinds of problems. This is like a huge shoulder, head, and shoulder. If I were to put this on a weekly chart, you can pretty clearly see the shoulder, head, and shoulder. This is a right shoulder break. And so you got, this is basically a neckline break on a head and shoulder on the weekly. And it's got AMC. which is not AMD. AMC is one of the meme stocks, and it made a huge run up, and then it came right back to the area from which it came. But it's looking a little bit better and kind of calmed down a little bit in these areas. Let's go into JP Morgan, which had earnings. Okay, JP Morgan's chart looks ill. It does not look good at all. There's the big gap on earnings. And I mean, JP Morgan's in a downtrend. Citigroup is expecting earnings next week. They have a lot of Russia exposure. They are also in a downtrend. If financials are going down, you look at the FAS, right? So the entire financial index. This is one of the financial ETFs, and that the whole financial sector looks down. So certainly the prospects do not look good. So usually we gauge the financials for if financials are doing well, probably all the stocks will do well in earnings season because financials finance all the other stocks. So this is not looking like it's going to be a very bullish earnings season, at least from my analysis. All right, so let me go back 1 second and take a look at some of the stocks that the traders traded in the competition. All right, let's go into these competition stocks. Let's take a look at LEXX. Okay, one hit wonder, 1 day wonder, big spike to the upside, and then this is why we call them poppers and then droppers, because it popped and then dropped in the same day. Let's take a look at Rite Aid, which is on every corner of New York City. This looks like an earnings pop and drop. So we had a big pop up to the upside. Stock is in a very big downtrend. And then certainly today it gapped up, and anybody who had bought it at $8 previously looked to get out of it. Very, very heavily traded in our competition today. It was our second most traded stock in the competition today. VERU, really strong move to the upside this week. This was on the radar every day this week. Just a lot of news. I mean, it ran from $4.50 all the way up to $15. An incredible run. CRTX, another big runner. Well, CRTX really not running today, but certainly to the downside. Claris has been moving down steadily over the course of the week. Probably that's why people were trading it. It's a low price stock, so people tend to like to trade low price stocks. They can trade the full 2,500 in the competition. SOFI, another stock breaking down. Really just continuing to trade to the downside. Very, very much down in a big downtrend, and certainly people like to short. And this is one of the targets for the day. So a lot of action in our second week of the competition. Everybody, I'd like to wish you a very, very happy Passover and a happy Easter and a happy holiday and a wonderful day off tomorrow for Good Friday. And everybody, see you next week. Trade well and stay consistent.